So it's time to introduce you to order blocks, and that is by talking supply and demand. So first and foremost, let's break down the basics. Supply and demand are principal factors that affect the pricing of foreign currencies as well as all other markets. Supply is the amount of one asset that is available or in circulation, while demand is the general desire for the asset. So together, these two things, supply and demand, will determine how much a currency is worth. Now, if there's more sellers, supply, than buyers, then of course the price goes down. It pushes the price down because there's more people that wants to sell a product or currency or whatever it is than people that wants to buy it. So the price goes down until we find enough buyers. Now, if there's more buyers than sellers in the market, there's more demand, then the price goes up until there's a balance between buyers and sellers. On the charts, how does this look? So the easiest way to draw supply and demand zones is if you basically, like when you're drawing out support and resistance, you draw out the areas that the market bounces up from. So how is support and resistance areas created? It's created through supply and demand, through liquidity zones. Supply and demand zones are liquidity zones. So when market bounces off from this area up here, it's very often due to supply. People bought in, they moved up, they made their profits, and they sold. And when they're selling, market pushes down again. Picks up demand down here, new buyers comes in, pushes the market up, people sell, market goes down. New buyers comes in, pushes the market up, and they sell at the supply area, market goes down again. So this is how the dynamics of the market works with liquidity. Now let's look at a real chart for this. So to understand how to find supply and demand zones, it's a little bit advanced and it will take time for a person to understand. So we save that for the more advanced lessons. And here in the basics, we just want you to understand the basic concepts of this, so you understand why market sometimes does what it does. A trained eye can easily spot supply and demand areas very easy, a little bit here and a little bit there. I can even spot them in the middle of a range, like here, for example. So these are different supply and demand areas. Now, I don't want to confuse y'all. So what I will show you is a very simple technique to spot supply and demand, and that is with the Fibonacci tool. If you haven't watched the Fibonacci video yet, I recommend you to immediately go back, pause this video, go back, watch the Fibonacci video, understand it thoroughly before you proceed with this video. All right, so you pull Fibonacci, let's say from the bottom here to this top. So we have pulled it on this whole sequence. Between the 78.6 and the 88.6 Fibonacci retracement, you will find what we call the demand zone in this case. So this is very often an average of a demand zone, you could say. Now, same thing if you pull the Fibonacci down. If you pull it from this top down all the way to this bottom, then the demand zone will be where? It will be here between the 78 and the 88.6. So if market goes back up here, it's because the supply zone is here. So here's where you will find the supply zone. Now let's look at another example. So market pushed up here, created this high, this higher high. And now we're pulling Fibonacci from there all the way down to this bottom, to this last low that was created. And what do we see? Market respected this area, this supply area very well, the 78.6 to the 88.6. It respected it well. It came in here, accumulated orders, liquidity, before it did its massive push downwards. Let's look at another example. Let's look at a demand zone example. So Fibonacci pulled from this low right here to this highest high right here. And what do we see? The demand area, very well respected by the market. Market came in, picked up orders in this demand zone between the 78 to the 88.6, moved up, came back down, picked up more orders, and pushed up again before it thoroughly broke through. So that is very short supply and demand. If you find it interesting, very good, because if you understand, if you master supply and demand, you will master the markets. The whole market is based off supply and demand. If there's no buyers and sellers, then there is no market. There's no trading market. There need to be buyers and sellers. In other words, supply and demand. If you want to understand this deeper, dive deeper into this, then there will be several other videos on supply and demand, on order blocks, and on liquidity zones in the Advanced Academy in the VIP section.